Hey everybody, Mike Vacchi, PrincetonTrader.com, here with your evening recap for Sunday night, December the 15th, 2013. Okay, daily chart of the ES, and the takeaway from Friday really was now that the 1783 December, which is 1777 area in the March contract, which is now the front month contract, when that area consistently went resistance, and you'll see the high from Friday is 1776.75. So we get over on the 15-minute chart, and we see this. So you have 1783, which is from the December contract. So what we want to do is slide this down for March. 77 becomes the key area. So it begins to hold in the overnight. And once we get into here and it holds, you just see it start to drop out. And the key is, as you back this out, this is what you're seeing. You saw the original resistance at 11.5, resistance at 1808. Then we saw resistance at 1805. Then we dropped back down into this 1783 area. We lost 1801, which was very important. When 1801 got lost, it was a very quick trip to 1783. 83 tried to hold up, and it finally just gave way. So the bears are consistently putting in lower highs. They're putting in lower highs, and they are making lower lows, and this has to be noted. And we traded as low as 1765 on the March contract, and as we get back out here on the daily, you see that we're below the lower band, okay? But these bands were very tight. So the fact that we're below the lower band isn't quite the alarm bell that it normally would be if the bands were wider apart. And you see the bands start to expand. And there's potential here for the bears to be able to ride the lower Bollinger Band. I'm looking at the 50-day exponential moving average here, 1763.24. We typically recently have talked about upper band rides because that's been, the flavor of the year. And the dynamic of making a low in the morning and then having it reach up. You make a low in the morning and it reaches for the upper band, touches it, and you can't roll over the daily chart until the low of the day takes out the prior day low. Well, the inverse is true for lower Bollinger Band rides. So I'm looking for a little bit of a drift up higher in the overnight. It could drift up all the way to 1777. It really could. And then a move back down tomorrow during regular hours to reach down and touch, if not go through, the lower band. And unless it breaches the Friday high, 1776.75. So as long as 1776.75 stays good, then the chart continues to be in lower Bollinger Band ride mode. We are certainly in sell rallies mode. I really want everybody to get focused on the fact that we are selling rallies. We are not buying dips. Why? Because the market has decided that it wants to trade in the lower half of the bands. If it trades in the upper half of the bands, we're buying dips. If it trades in the lower half of the bands, we're selling rallies. If it trades below the bands, then we do buy dips there. But I'm a little leery of doing that right now, and I didn't do it on Friday. I'm leery of doing that now simply because the bands were so tight and they're just starting to expand. So I'm much more comfortable being in pure sell rallies mode, at least until the market puts together a little bit of a stronger bounce, or we continue to see this lower band action, and we give the bands a chance to really expand so that a move through the band is a little bit more meaningful as a dip buy as it is versus what it is right now. Although if you bought the dip here below below the band, you're basically back to even. But that's getting back to even over the weekend, while waiting over the weekend isn't really all that attractive a strategy, at least for me. So that's what I'm looking at into tomorrow. So everybody have a great night. Follow us on Twitter at Princeton Trader. Check out the website. Check out the chat room. I will be back in the morning with a market webcast. Lots of charts this week. Lots of content. And look forward to talking to everybody on Twitter and seeing everybody in the room. Trade them well.